From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
From Bloomberg's Washington, D.C. studios to our TV and radio audiences worldwide, welcome to Balance of Power. Alongside Joe Matthew, I'm Kaylee Lime.
Stocks plunged in the worst two-day sell-off since March 2020, with retaliatory tariffs from China overshadowing a strong March payrolls report and the Fed chair signaling rates will stay on hold. We'll have analysis from Heather Boushey, formerly of the Biden White House Council of Economic Advisors.
President Trump extends the deadline for a TikTok sale by another 75 days as his administration works to finalize a deal. Senator Mark Warner of Virginia, the top Democrat on the Senate Intelligence Committee who helped lead the divest or ban charge, joins us with reaction.
And Republican Congressman Mike Lawler of New York also joins us this hour on the future of tax legislation as the Senate plans a vote-a-rama through the weekend to pass its new budget plan. Thanks for joining us on the late edition of Balance of Power on this Friday. A tough go on the markets. And joining us now with a recap of a day of turmoil on Wall Street is Bloomberg's Romaine Bostick in New York. Romaine?
Yeah, the superlatives are vast and many. An S&P 500 down almost 6% on the day, 9% on the week. The worst two-day plunge for the index going back to the onset of the pandemic in March of 2020. And that's where most of the superlatives will take you. Unprecedented times with the S&P down 17% from its all-time high. The NASDAQ 100, which is all those big cap tech stocks, that's now in a bear market, meaning it's down more than 20% from its all-time high. You also had treasuries and the yen rallying. Those are safe haven bids. The idea that people are looking for some degree of safety to protect their money in the idea that there could be more turmoil. Equity option activity hit a record high on this day as people tried to position around that. Volume, at least as measured by the three main tapes that run across here in New York, there has not been a single day in modern history where we had more stocks swap hands. And I don't know if you can throw up the VIX at all. This is the main fear gauge. Basically, when people start to predict increase in volatility over the next 30 days, that goes up. That hit 45 at one point on the day, settled right around there. There's only been a couple of times in modern history, Joe and Kaylee, where it's exceeded that amount. And that was A, at the start of the pandemic, and B, back during the global financial crisis in 08-09.
Incredible, the comparisons we're making. Bloomberg's Romaine Bostick, thank you so much for joining us. Now, against the backdrop of the market turmoil and this new tariff regime, Fed Chair Jerome Powell had to speak, and he made it clear that the central bank won't be rushing to react to the sweeping tariffs or to the financial market turmoil.
I will say, though, you know, it feels like we don't need to be in a hurry. It feels like we have time to, yes, it feels like we don't. No, I mean, it's like I said, you have inflation is going to be moving up and growth is going to be slowing, but it isn't really. To me, it's not clear at this time what the appropriate path for monetary policy will be.
Joining us now for more is Bloomberg's Mike McKee. So, Mike, at the same time he was saying we're not necessarily going anywhere anytime soon, he also was warning of potentially a persistent inflationary impact of these tariffs.
Yeah, basically, the Fed chairman came out and said stagflation is a very real possibility now, that the tariffs are going to produce worse outcomes than the Fed had even expected, and that they could see higher inflation and higher unemployment, which is a synonym for them for lower growth. And so the Fed would be put in a really bad position because there's no easy way out of that. Either direction they go will worsen the other one. So Jay Powell suggested that this is, we are facing some tough times ahead, probably, although he didn't go so far as to say this is actually going to happen. He said we have to wait and see what the impacts are on the economy as they develop.
Mike, I'm guessing Jay Powell would not have held that event today if he was in charge of the scheduling, the way this coincided with everything right now and the way the markets are churning. You spend more time around him than most. What did you think of the words he chose, the fact that he went where he went today, and his demeanor in public?
Well, I think it was very deliberate. He did not use the word transitory. He took that part back, said that prices may go up initially, and then he said they could continue to rise. So that's a complete change. But I think he took advantage of the opportunity to basically tell the markets there's no Fed put coming. As long as the markets are functioning, as long as there are buyers and sellers and they can transact business, the Fed is staying out of it. It's not their job to worry about tariff. It's not their job to worry about tax policy. policy. It is their job to worry about inflation and growth. And he said, until we have to do something, we're likely to just sit here. So I think that's one reason we saw the final leg down today in the markets is those who were holding out for help from the Fed realize they're not going to get it.
Great to have Bloomberg's Michael McKee on a day like this. Mike, thank you so much. As we turn now to the White House, the politics behind all of this, the administration responding to the tariff fallout, and Bloomberg's Wendy Benjaminson with us at the table. Wendy, it's great to have you with us today. A lot of truth socialing today from President Trump. At one point, he said to the many investors coming into the U.S. and investing massive amounts of money, "My policies will never change." Those are not the words that Wall Street wanted to hear today, I'm guessing, but he is standing by his guns.
He is, for now, he is absolutely standing by his guns. The question is, for how long will he stand by this? And, you know, there is no evidence yet that any investors are rushing to invest in the United States at all right now. They're all trying to figure out how to get through these tariffs and pass them on to the U.S. consumer. So that's, you know, the backdrop of this. But at some point, and the administration has fanned out Howard Lutnick and others, the Commerce Secretary and others, to go on TV and say, trust Trump, he knows what he's doing. This will all smooth out in a few days or weeks. But as my colleagues have noted here, that's not. No one seems to be trusting that will happen. So, you know, we've seen some reporting that at this moment, Trump just thinks he's right, that he's the one who can fix it, as he said in 2016, and that everyone else is wrong. At some point, he may find an elegant way out, or a way out that saves face, in which he can make deals. You know, yesterday he claimed the deals would only be phenomenal. He would only make a deal. Maybe those deals become a little less phenomenal if this market downturn keeps happening. So, you know, that's what we should watch, is where he starts to back off a little bit.
And just quickly on deals, he's still working on a TikTok deal, Wendy, today, extending the deadline another 75 days. The problem is, to get that done, he has to work with China, who just hit us back with tariffs of their own today.
Right, and he posted on Truth Social that they shouldn't have done that, and that was, bargaining from a weak position or something like that. But that's right. And so ByteDance has acknowledged, the parent company of TikTok has acknowledged that they are in talks, and Trump has said we're waiting for all the approvals. The question is whether China will now agree to this, or because this trade war has started between the two superpowers, whether this deal will go through. But right now, TikTok has 75 days to remain working in the United States.
All right, Wendy Benjaminson, thank you so much for joining us. And still ahead, we'll have more on the economic impact of Trump's tariff and that TikTok deadline extension with Democratic Senator Mark Warner of Virginia. He's next on Balance of Power on Bloomberg TV and radio.
If the tariffs remain in place and we have retaliatory tariffs, that is a very possible outcome. If we go into a recession, particularly a bad recession, 2026 in all likelihood politically would be a bloodbath. You would face a Democrat House, and you might even face a Democrat Senate.
Texas Republican Senator Ted Cruz on the Verdict with Ted Cruz podcast earlier today, issuing a warning on the potential political ramifications of President Trump's new tariffs. And joining us now for more on Bloomberg TV and radio is his Democratic colleague, Senator Mark Warner of Virginia, Vice Chair of the Senate Intelligence Committee and member of the Senate Banking and Finance Committees as well. Senator, welcome back to Balance of Power. If you're getting this kind of language out of your colleague, Senator Cruz, when Senator Chuck Grassley...
But on this one, you know, he nailed it.
I'm wondering if you agree with Senator Chuck Grassley as well, who is co-sponsoring legislation to require congressional approval for these tariffs. Do you get a sense that even a Republican-controlled Congress is getting ready to reclaim some Article I authority?
I sure hope so. It has been stunning to me. And listen, I've been criticized often for being too bipartisan, but I have been so frustrated by my Republican friends who've been so intimidated by the president to date that they have been just ceded power. And so taking back Article I power in terms of tariffs and the ability for Congress to have a voice. Candidly, the politicization of our intelligence community. One of the secondary stories of today was the firing last night of the head of the NSA, a 30-year career person, and about 10 other people from the National Security Council by some, even beyond MAGA extremist, this Laura Loomer lady. And then we've got obviously these huge disruption in the markets taking place. And all that, as we get into tonight, is one of the worst nights in the Senate. We have what's called vote-a-rama, because the Republican proposal to literally add $7 trillion to the debt, over a decade is going to be the first step of that is going to move through. So it is a triple whammy Friday.
Wow, you just touched on, I think, every topic we wanted to discuss with you this evening. Senator, I want to go back a couple of days to a news conference that you held outdoors on Capitol Hill. You introduced us to a local entrepreneur by the name of Bill Boushey. He's the founder of Port City Brewing Company in your hometown of Alexandria, Virginia. I talked to him a couple of days ago. Actually, it was just yesterday, no counting. He gets his malt from Canada. He gets his bottle caps from Mexico. He gets his kegs, made of steel, by the way, from Germany, and he just lost his bottler because everyone's trying to avoid making cans with tariffed aluminum right now. Here's what he had to say about the impact on his company.
We've never seen anything like this, and I was talking to our bottle supplier a couple of weeks ago, and he was explaining to me that he doesn't have an answer for us. He's been in the business for 35 years, and he said he's never seen anything like this either. There's a lot that goes into our supply chain, and it's just really been frustrating the past few weeks because our entire supply chain has been thrown into chaos.
Senator, we saw about a half dozen companies pull their plans for IPOs today because of what's going on around us. At what point do we go to the next level and someone like Bill Boushey, God forbid, is telling a story about going out of business?
Yeah, it's awful. And it's kind of like this was totally predictable. I mean, if you listen to any economist, when you put on this level across the board tariffs, specific tariffs can be used as a tool, but not as an economic theory of the case. The last time I think we did this with Smoot-Hawley, and yes, America had a slight trade surplus, but the price was we ended up with the worst depression in our American history. And I just, I was with Bill. What was also with Bill the other day was we brought a guy from Richmond who makes bourbon, and he is basically seeing all his business dry up from Canada. And the fact is that, the Canadians rightfully are so angry at us that even if Trump were to pivot again, the bad feelings with our trading partners will be such that American products and goods, I think, are going to have a hard time reclaiming market share, even if Trump backs off.
Well, the Chinese don't seem to be too happy either, having slapped retaliatory tariffs on U.S. imports at a rate of 34% today. Senator, at the same time, we've learned that President Trump is extending the deadline to reach a deal for the divestiture of the U.S. operations of TikTok for another 75 days. Do you believe that China is going to be willing to acquiesce to that in this current environment? And frankly, if they get to keep the algorithm, is it in keeping with the law you and your colleagues fought so hard to pass?
Haley, thank you for bringing it. Let's get in. I know lots of other going on, but Donald Trump was the first guy to point out the problems with TikTok in about 2019. And I was reluctant to believe, but as chairman of the Intelligence Committee, I have seen the power of this app to be a propaganda tool that's frankly unmatched. Congress, 80% passed a law that says we don't want to get rid of TikTok. We just want to force a sale so the algorithm would end up in non-Chinese hands, a fairly low bar. I think the Biden administration, they should have pushed the negotiations quicker, but Trump gave what was partially illegal 75-day because the extension back on January 19th. We gave him the benefit of the doubt, but you adding this additional 75 days, that is completely against the law. And then, as you just pointed out, if they end up with a deal where the algorithm remains in Beijing, I got to tell you, I was a tech guy. I don't know how that would work. And I think the whole episode would be a scam. And I'm looking for my Republican friends who joined me in this effort to actually raise this concern. Our national security should not be used as a trading item in this tariff war. And that's what I was starting here. Well, you might lower the tariffs a little bit if China gave in. But I think when you mix the two, you have a recipe for disaster.
Well, in the spirit of national security and from your perch on the Intel Committee, Senator, I wonder your thoughts on what has become of the Signal group chat story. I know this is something you were very passionate about, and you got an earful from members of the military and their families on your recent visit to Hampton Roads about all of this. The White House says the case is closed. Will there be any recourse from the Intel Committee as you try to investigate this?
You know, we've always been bipartisan. I've been urging the current chair to work with me on a solution. Luckily, the Armed Services Committee has launched a Inspector General investigation. That takes 6 to 9 months. The basic simple things like, has anybody collected the phones that these folks used and checked for malware? We now hear that there was not simply a single Signal chat, but there were 20 plus. What other classified information was out there? And as you mentioned, I was down in Hampton Roads, a heavy military area. These folks were rightfully pissed off because they knew if you'd been a military officer or a line officer for the CIA and you'd done this, you would be fired, no questions asked. And what it does is a double whammy. It both undermines the confidence and morale of our men and women in the military and the intelligence community, but it also makes our allies around the world reluctant to share information with us if we don't keep it classified. The Israelis in particular, has been in the public reporting, were particularly angry because they shared some of their best sources about Yemen. And they're saying, like, well, if you're not going to keep it secret, we're not sure we can share anymore. Those don't make America safer. So we ought to get, and I'm going to be offering an amendment tonight, we ought to get some basic accountability here.
Well, and the subject of what keeps Americans safe, you alluded to, Senator, earlier, the firing of NSC and NSA officials. What is the immediate impact on national security? Well,
what I'm fearful of is that these positions that have traditionally been non-political are going to be politicized. General Hawk, 30-year career military, thought he did a very good job. If he was being fired because this conspiracy theorist that thought that 9/11 was an inside job, that thought that school shootings were all staged, a normal White House would not let somebody like that within 100 yards of the White House. This crazy person was inside giving staffing advice. The president took it, appears, on General Hawk and the NSA and Cyber Command. They also took it on about 8 or 10 people who were on the National Security Council. And what is remarkable to me is many of the people who were on the National Security Council used to work for Republican House members or Republican senators. Will they speak up in defense of their former staff that they should not be fired? This is where it's all coming to a head. If our intelligence community becomes totally politicized, then, and you have inability to speak truth to power, and clearly this is a White House that does not want to hear truth to power, then we are in an extraordinarily dangerous realm.
Senator, it's great to have you back. We'd like to stay close with you on this. Democratic Senator Mark Warner of Virginia. Thanks for joining, as always. Keeping with our focus on tariffs this evening, we spoke earlier today on the early edition of Balance of Power with Republican Congressman French Hill of Arkansas. He joined us in studio, spoke to the counting of tariff revenue.
In our discussions with our colleagues in the House, we've been thinking about the importance of extending the President Trump's tax cuts, cutting spending, trying to right-size government so that we don't have $2 trillion deficits. And we're not counting on tariff revenue because tariff revenue is very difficult to predict.
Let's bring his colleague from the House in New York, Republican Congressman Mike Lawler, into the conversation. Now, Congressman, it's great to see you. Thank you for joining us from World Headquarters in New York. Your thoughts on this now? There's a lot of noise out there, and you don't have to look far to start hearing about the market reaction to President Trump's tariff regime. Does the attention that this is taking and the money that it's costing in terms of market capital slow down the drive to extend or make permanent the Trump tax cuts? Is this making your job more complicated?
No, I think obviously short-term volatility in the market is a factor that we have to look at. But the reality is that all of the economic decisions that are in play is what we have to focus on, putting into effect. So, for instance, obviously the president has put forth his plan with respect to tariffs. The question on this is, short-term versus long-term. You're seeing already countries make determinations that they are going to reduce their tariff levels down, in effect, to zero. You're seeing foreign investment into the U.S. The question is, how long does the volatility in the market last with respect to the tariffs as the president seeks to negotiate with other countries? With respect to the tax bill, this is something, obviously, that we are in the process of working through with respect to reconciliation and making permanent the president's tax cuts. Part of this is making sure that we are offsetting, the CBO cost affiliated with tax cuts with respect to savings in spending, as well as tariff revenue. As my colleague French Hill said, it's something that is going to have to be calculated, and so the CBO is going to have to provide that as we make that decision.
On one specific element of the tax code, you tweeted earlier today that $25,000 for the SALT cap, which Bloomberg has reported is a number up for discussion in these conversations, is, quote, woefully insufficient. Congressman, what number is it that you would find sufficient that you also think can get the requisite votes in your chamber?
Well, I introduced legislation that would lift the cap on salt from $10,000 to $100,000 for individuals and $200,000 for married couples. We are in the process of negotiating. I spoke with the Speaker and Chairman Jason Smith earlier this week about the need to have that negotiation. I'm not sure, frankly, where the $25,000 number is coming from. Might be coming out of the Senate, but certainly not coming out of the House. Myself, my colleagues, Andrew Garbarino, Young Kim, Nick LaLota, those of us in the SALT caucus have been very clear that there needs to be a good faith negotiation. Because remember, if the Tax Cuts and Jobs Act expires, SALT comes back unlimited. The problem, of course, is that it would be associated with the largest tax increase ever. The alternative minimum tax would come back. So that's why we need to negotiate in good faith and come to a number that certainly will provide immediate tax relief to constituents like mine in Rockland and Westchester counties in New York, who pay among the highest property taxes in America. New York State, the highest tax state in the country. We have a lot of work to do here in New York, but from my vantage point, we need to lift the cap on salt. It is an issue of double taxation and fairness, and I want to make sure that that gets done as part of any tax bill negotiation.
Well, Congressman, how confident are you in your ability of all of your colleagues to negotiate together if business of the House was held up this week by the Speaker trying to get rid of a discharge petition that you, of course, voted with the person who was presenting it, Anna Paulina Lula, around proxy voting for new parents? How does that get resolved when you return to Washington next week?
There's been a number of conversations over the last 48 hours. I'm confident it'll get worked out. But I'm confident in our ability to negotiate. President Trump has been extremely supportive on the issue of lifting the cap on salt. It's one of his priorities within the tax bill that he has laid out. So we will get there. Obviously, a negotiation takes time, but I think, given everything that is happening, getting a reconciliation bill done sooner than later is critical.
Can you get this done in time, Congressman, to include the debt ceiling? Because there is a concern that this might drag on for a while. You're trying to do a lot in what what the president likes to call one big, beautiful bill. If the clock is ticking here, can you get to the debt ceiling before the deadline? We're talking about something between August and September.
Yes, I think it's obviously paramount, and there's nothing like a good deadline to force folks to get to the table and negotiate a deal. And obviously, having the debt ceiling deadline looming will force folks to compromise and ultimately get a bill across the finish line, which is what needs to happen.
All right, Congressman, thank you so much for joining us live from Bloomberg's World Headquarters in New York. That's Republican Congressman Mike Lawler of New York. Appreciate your time, sir. And still ahead, as tariffs continue to put pressure on the market, we'll discuss the anticipated economic impact with Heather Boushey, former Deputy Director of the White House Council of Economic Advisors, next on Balance of Power on Bloomberg TV and radio.
It really was kind of that Mike Tyson moment for crude oil this week where everybody's got a plan until they get punched in the face. And really kind of that tariff announcement was the first kind of hit. And then the bigger hit that I think really kind of has shaken many investors is the decision by OPEC to not only unwind their production cuts, so they decided not to pause in the face of market weakness, but to accelerate the unwinds.
Rebecca Babin, CIBC Private Wealth Senior Energy Trader on Bloomberg TV earlier today as oil prices sank to a 4-year low. And joining us now for more analysis here on Balance of Power on Bloomberg TV and radio is Mike McGlone, Senior Commodity Strategist for Bloomberg Intelligence. So, Mike, if oil was punched in the face today, are we officially down for the count, or can we go lower still?
Lower still, Kaylee. Unfortunately, I've been called the perma bear in this space, partly because what happened with crude oil is when it pumps above the 100, it fueled what you're seeing now. It brought on that excess supply out of the U.S., and it shut down a lot of demand, as you see the proliferation of EVs come out of China. And now we're heading towards a normal cycle. So about the last 20 years, every time crude oil got above 100, it bottomed around 40, and maybe below that. We're heading there, particularly with the stock market going down. And remember, it's a stated goal of the Trump administration, and they have all the trends in their favor.
Wow. All right. $40 a barrel. What does that mean for gas when we're driving on 4th of July weekend this summer? And do oil companies keep pumping at that level? What happened to Drill Baby Drill?
No, exactly. That's what it takes to shut off this excess supply versus demand. That's what's been happening in this country for 20 years. It's been growing, more supply, less demand. We need to export. But the key thing is July, we still have a summer season, but come July next year, $2 a barrel is my call at some point. I'm sorry, $2 a gallon is my call. It's not, the thing is, Joe, it's not obnoxious. It's a normal reciprocal dip to the rally. It's just what it always does. The question, are there fundamental forces to make it not do that? Yet I see the fundamental forces making it do what it normally does. It has to get cheap. You basically got to get commodities cheap to shut off that excess supply and demand, and crude oil is the most significant. I don't see what stops it, particularly if the stock market continues to drop a little bit.
Well, one commodity that's gotten a whole lot cheaper, Mike, is copper. If you thought the oil chart was bad, that chart actually looks a whole lot worse. Does it continue in this precipitous decline?
Yes, unfortunately. So the key thing about copper is I like to point out I was an ex-trader, and sometimes I can see, I probably would have been stopped out on the way up and made a new high just recently, all-time new high at 537. Now it's down around 437. I think it goes down below 4, even lower. It's already at that price in London, and the U.S. is just catching up. So what we did is we squeezed out all the shorts for the wrong reasons, and the fundamentals of copper are just not good when the rest of the world is facing the tariffs from the U.S. and pressuring lower. And the key thing to think about copper is one thing I'll mention is bond yields in China, 1.72 10-year note versus the U.S. 10-year note, about 4%. That's severe deflationary forces from the most significant demand pull force in the world for commodities and copper. And they're heading to deflation, kind of what kicked off in Japan 20, maybe 30 years ago.
Mike, you've been great this week. We might need you next week. Mike McGlone of Bloomberg Intelligence with his view on the energy market. Today on the early edition of Balance of Power, we spent some time with Stephen Myron, the new chair of the White House Council of Economic Advisors in this Trump White House. Here's what he had to say about the current state of the market.
Of course, there's going to be some market volatility on the back of that. Of course, there's going to be some adjustments on the back of that. But on the end of it, things are going to be materially better. And I'll tell you why. Not only will the tariffs incent reindustrialization in America and companies coming back to build in America, but there's also two other legs to the stool that are of significant importance. There's the deregulatory agenda, and then there's the tax agenda. And both of those are profoundly stimulative for the economy.
For more on this, we turn to Heather Boushey, former member of the White House Council of Economic Advisors during the Biden administration. Heather, it's great to have you back on Bloomberg TV and radio. Markets speak for themselves today, and I walk back to when you first came into the White House with Joe Biden as president, and the question every day was, when does the recession start? You had multiple predictions of recessions over that 4 years. We're looking at J.P. Morgan since we came in today, saying it now projects a U.S. recession in 2025, having already increased the odds. Do you believe that to be true?
Well, certainly there's, I think, a lot of concern that that is true, a lot of concern about what's going on with this economy. We went through so much in an economy that was actually so good, that was delivering jobs and wage increases for people around the country. And yet this president has seen, already, and it's not even been 100 days yet, this collapse in the stock market, due to this very chaotic and arbitrary tariff policy that he's put into play. And this is not good for the U.S. economy, and I wouldn't be surprised if it didn't continue to pull it downwards. I still continue to hope that something will shift the balance here, that maybe we will get some sane policy. But I think what is so disturbing about it is that this policy that he announced, the president announced this week on tariffs, is going to raise prices on a lot of different things coming into the United States, but in a haphazard way. There's no real logic to it. And it doesn't make sense for, as the CA chair, as you just said, in terms of a plan to boost U.S. competitiveness in manufacturing. We did that over the past few years in the Biden administration. We saw a historic run-up in the construction of new manufacturing plants all across the country. After, in the President Trump's first term, he did not see that, even though he did tariffs. I don't see how you see that kind of growth with this kind of economy and with this kind of haphazard economic policy.
Well, so to that point, Heather, their argument that the deregulatory and tax relief efforts that will come later are going to help juice the economy. Is it so much that those ideas in and of themselves aren't going to have the economic impact they think it will, or they can't have the economic impact soon enough to offset the more immediate effects of tariffs being implemented like this?
Well, so if we accept the goal that they want to make a significant structural shift in the U.S. economy to make more here in America, there's a lot of different policies that they would need to do to make that happen. How do you support investment all across the country? While we are having this conversation about tariffs, President Trump has allowed Elon Musk to take this chainsaw to the federal government, cutting back on all sorts of programs that make it easier for firms to invest around the country, make it possible for communities to do what they need to do to make that investment possible and viable and effective in communities around the country. So I think I take issue with the idea that just deregulation is going to solve the problem. You actually need government to be effective around the country to help make that investment possible. And then let's talk about these tax cuts. I continue to think that all of this is a distraction relative to the massive tax cuts that look like they're now closer to $5 trillion that the Senate has been working on this week, the Republicans. And these tax cuts that they are putting into play are going to, again, give massive benefits to those at the very top of the income distribution, not helping typical Americans, not helping U.S. manufacturing workers. And at the same time, they're going to mean cuts in basic services for Americans, cuts in access to health care, cuts in access to education, the kinds of things that help improve our human capital, improve our communities, and make those investments that we want to see in communities across the country viable. Let alone what it's going to mean for families and workers all across the country. So it does seem like the number one goal here is to give the rich as many tax cuts as we can, but that is not going to create the kind of growth that the president claims. It didn't in his first term, and now he's doubling down on these failed economic policies.
Heather, I'm sure that you're watching some of the front running that's taking place before tariffs taking effect. And by the way, they will start kicking in at midnight here, whether it's cars or home appliances or even imported wine. Consumers have been very busy. Can you paint the picture for us of what the consumer will be doing? How much money will be left in the second half of the year?
Well, consumers are going to get hit hard. And, I worry that especially consumers that are more income constrained, where they don't have a choice about when to make their purchases, workers and families at the lower end of the income distribution are going to be hit especially hard. Of course, one of the first things that's going to happen is grocery prices, fruits and vegetables that we import from overseas. Those costs are going to go up. And then we're going to see the cost of everything go up because tariffs are now on everything, whether we can or already do make it here in the United States. And that's going to create, people are going to hold back on spending. They're going to have to spend more, and that's going to leave less money left over for all the other things that they want to do in their lives. So, and at the same time, of course, because of all of these cutbacks that, Elon Musk chainsaw is doing to the federal government, there's millions of people who actually are now going to need to spend more money, more of their own money on healthcare or education, and they're not going to have the resources for that. I mean, this is really an impoverishment of Americans all across the country without a clear plan to deliver benefits for communities and for workers and for industrialization. This is what I find so challenging to believe, that the president is asking the American family to accept this pain with no clear plan for any long-term gain.
Well, and speaking of things that are challenging, Heather, we heard from the chairman of the Federal Reserve today indicating that he's not in a rush to change policy, but keeping in mind they have a dual mandate here. It strikes me that we are talking about both an inflationary risk and a growth risk at the same time. They cannot respond to both of those things simultaneously, right? So if it all comes down to it, now that you're outside the White House and can weigh in on this, which side do you think they ultimately choose?
Well, the Federal Reserve is in a real bind right now because they continue to want to get inflation down. And of course, what's happened over the past few months is as President Trump has implemented his policies and people have seen what that really looks like, consumers have lost confidence in the economy and they now expect prices to be higher far into the future. That is exactly where the Fed didn't want to be. They didn't want to have to worry about those longer term expectations solidifying into higher prices. That's going to make it harder for them to contain inflation, while at the same time, they're very worried about economic growth. We have this massive shock to the economy. I mean, quite frankly, let's be clear, we have not seen anything like this, certainly in my professional career, in my lifetime, where the president causes this kind of economic slowdown in the economy, and the Fed is struggling to figure out how to cope with it. But I really do worry that we are going to see that kind of stagflation that we saw in previous eras loom its head, and it does not need to be that way. Let me add one more thing. Today, of course, is the day that we got new data on unemployment and jobs. And of course, that data looked pretty good. But let's remember, that data is very backward looking. And the thing that we know about the labor market is it's always a lagging indicator. So it can take some time for economic turmoil to show up in hiring and in people being laid off. And so we need to be watching that over the next few months and not really take a lot of solace in this month's numbers.
All right, Heather Boushey, former member of the White House Council of Economic Advisors under the Biden administration. Thank you so much for joining us. And still ahead, our political panel gets their chance to weigh in on Trump's tariffs. They'll join us next on Balance of Power on Bloomberg TV and radio.
That list, I'd like to know who actually created that list. For example, they listed the Heard and McDonald Islands, which of course have no human habitation, has penguins. What are you going to do? Are you going to sort of, tariff the penguins?
Andrew Hale of the Heritage Foundation last night on Balance of Power, talking about some of the more unlikely targets of President Trump's new tariffs. A moment of levity in a week that in a lot of ways has been pretty rough especially if you're invested in these equity markets. And joining us now with their reaction to these tariffs and the fallout from it is this evening's political panel. Lester Munson, co-head of the international practice at BGR Group and Republican strategist, alongside Democratic analyst and Bloomberg politics contributor Jeanne Zaino, political science professor at Iona University. So, Lester, the Penguins, I would imagine, are not invested, so they have been immune to some of this week, even if they're going to have to start paying tariffs with their pebbles. But when you look at a week like this one and the messaging we are getting from the administration, as bad as the markets seem, they say everything is going to be okay in the long run. Are they missing the moment here?
Well, I hope they're not. I hope they're right. I hope that this does balance out. All evidence seems to be to the contrary. To be clear, there's not really a coherent economic theory that leads to us thinking this is going to be successful. So I hope the president is kind of building in some flexibility here to adjust to the very real market realities that we've all seen play out for the last couple of days. This is a tough situation. We should give him a little bit of time. I think is not unreasonable to give him a little bit of time. I don't want to overreact today. It's just really been a few hours, a couple of days. But we should hope that the president has the flexibility here to pivot to something that is going to work over the long run.
Jeanne, J.P. Morgan says there will be a recession in 2025. And we're hearing the R word a lot. We're hearing the S word a lot. Won't say it on TV. What are the politics of these markets for Donald Trump?
Well, Donald Trump himself, when running for president in 2024, said that inflation and recession kill presidencies. And he was describing, of course, Joe Biden's presidency. And now he has come in, and within 3 months, he has managed to rock the stock market. He has managed to put through the most regressive tax we have seen. He has managed to tell people in a very callous way that he doesn't care if they have to pay more for their cars. I mean, the list goes on, and people are suffering. So while I agree with Lester, we don't want to overreact, I don't think it is an overreaction to say this is a self-inflicted wound. And at this point, I don't think our focus should be as much on the president, but on Congress. There's a reason they are the first branch of government. Stand up. You have the power to regulate commerce and regulate it. One person shouldn't have the power to do this under a faux Emergency Powers Act in the United States, and that's what we're seeing.
Well, with that in mind, Lester, the president doesn't have to stand for re-election again, or at least he's constitutionally barred from doing so even if he wanted to. That is not true for Republicans who currently control Capitol Hill. It's ultimately them that provide the pushback to this.
Right, and we're already starting to see it. Ted Cruz has kind of come out and said there are going to be implications for this potentially in the elections next year. We saw Chuck Grassley move with Senator Cantwell to start to pull some of this policy responsibility back to Congress, which Congress was happy to give to the president back during the early days of the Cold War as a way to respond to that very real crisis. It's a different time. Can Congress do that realistically today? I don't think so. But it is nice to see these members who are no squishes, if you will, starting to talk that way, that it's time to start to rethink how this power is distributed.
If the White House called BGR, brought you in for some advice here, would you be urging them to look for off-ramps this weekend?
I don't know if I'd phrase it that way. I think I would praise the president for his leadership, for his leadership and his willingness to take a tough stand. And I would talk about all the examples of him flexing to a new reality once he kind of saw what the immediate consequences were. And I would talk about how he does a really good job of not being too ideological about things and being a very pragmatic president and doing the thing that is actually best for our economy.
So yes, is your answer. Got it. Okay.
Well, but isn't there still a chance, if you judge his conversation with Vietnam today about lowering their tariff barriers, Jeanne, that at least in some sense he is able to achieve his objectives here and can work the art of the deal?
Yeah, I mean, the reality is we've heard mixed messages from the president and the administration on what he is doing this for. And if it is truly to negotiate, you would think he wouldn't do it across as many countries and to the extent he has. But if it is not to negotiate, then what is he doing this for? Is he looking to bring back manufacturing to the United States? They have to be clear on the goal, and they need to minimize pain, short and long term, in fulfilling these policies. And I know what I would tell the president if he called me this weekend, which sadly he won't. I would tell him to watch Ferris Bueller's Day Off. Remember that old movie where Ben Stein Yes, he says, what happened when Republicans did this in the 30s? It didn't work, and the Depression continued. So it's a lesson. Maybe the president needs to sit down with some Ben Stein and review that. That's a good little piece of film.
Well, park your voodoo economics right here for a boy from Chicago. I'm sure that means a lot to you. Lester, if we pick up here where we left off on Monday on Wall Street, another 1,000, another 2,000 points, what will be the political calculation at the White House?
Well, I think we will see things start to shift, and we're going to hear more senators and more members of Congress talk about how there needs to be some flexibility, and we need to be thinking about how this is impacting the average American. Because this is not just happening to elites. Actually, at the end of the day, the elites, this is kind of the conversation on Twitter, right? This is bad for elites and good for the working man. That's not really true. The elites are going to be fine regardless of what the policy is. It's the damaging impact on the middle class and the working class that we're probably going to start to see next week if things continue to play out this way. Yeah. And then I think the White House will respond.
Jeanne, we're out of time, but do you think the sun comes out tomorrow?
I do think it will, Kaylee, and I hope you are ready to have a nice weekend and watch Ferris Bueller again.
Okay. Ending with a little optimism,
So
Joe.
much optimism, yeah. Now I'm going to go watch the movie. Lester Munson, Jeanne Zaino, great to see you both. Thank you for the humor. We kind of needed that today. Coming up, the Senate preparing for vote-a-ramas this weekend. Tariffs are set to go into effect at midnight. This is real. We'll look ahead to what's next in Washington. Coming up next on Balance of Power on Bloomberg TV and radio. It's Balance of Power on Bloomberg TV and radio alongside Kaylee Lines. I'm Joe Matthew. Thanks for spending some time with us on this Friday. We're not done yet. Senate Republicans will begin voting tonight on a new budget framework to clear the decks for a massive domestic policy bill amid criticisms from hardline conservatives, moderates, Democrats. We talk about it every day here. This is on the way to reconciliation. But first must come vote-a-rama, so time to bring in the takeout and the wine. But that's not the only thing happening tonight.
No, in fact, 6 hours from now, or just about, at midnight, is when the tariffs take effect. This is the first base level tariff, 10% on all U.S. trading partners. Of course, that is just round one. Next week, on April 9th, is when the reciprocal levies go on top of that.
That's right. We'll see how the markets behave between now and then. And that's why we have a special program lined up for you on Sunday night.
Indeed. Make sure to tune in Sunday evening, 5 p.m. Eastern time, for a Bloomberg surveillance special, as we look for coverage of how futures will be opening after a brutal week on Wall Street. Everybody take a breath, enjoy the weekend. We'll see you back here on Monday. This is Bloomberg TV and radio.